How's it going, guys? It's Keir here, Nighthawk Trading. Just another quick video. Just going over market structure, just to kind of clear up a lot of things, to find your better entries and stuff like that. So we'll hop over to gold. This was my trade last night. Hop over to the 5. So first thing I identified is we've got this downtrend. Down, up, down. But what we've seen is from this push down here, this low here, done that a minute, sorry. This low here that's created the low. You can see breaking this area here. Came back to make that pull back. So you see it come from down here, coming back to make the pullback. Where are we now thinking price is going to want to push down to? Okay, so we're thinking price wants to break this area here. So once we know our structure, very simple, straightforward, finding your area of where you're wanting to trade. Obviously this is a 5-minute chart, so this is what I'll look at. Obviously we've got this kind of area of chart, the 30-minute where we've got this move up, breaking highs here, coming down, and then potentially looking to break that. So that's overall, but on the 5-minute chart, what we're looking at currently, because I'm scalping, we don't need to look that far ahead. See the push down, push up. The most likely thing to happen when this down is for it to clear these lows, which it did. We ended up catching a 46-to-1 risk to reward and letting the partials run. So all I did was I marked out my areas of my key areas that I was looking for. So we've got this kind of way here. We're looking for price to come and break these lows to continue down. So we've seen this area of interest is coming down, push back up, coming down, not broke these lows yet. I'll hop on the 1 minute. Yeah, so here we go. You see on the 1 minute, nice healthy downtrend. These are your areas, breaking structure all the way. So you see, just highlight that for you guys. Coming down, pulling back, breaking this structure here, breaking the lows, coming back, breaking the lows again, coming back. It's not clearing this area. So this is what people kind of need to understand is once price gets to this point and it starts going up, even if this continues up, this could potentially, after making this push down, this could come up here, come down, come up, come all the way back up to here, and I'd still be bearish on this price right now, looking at this, just from looking at this, because what you need to realise is as long as price doesn't clear these highs, we're still bearish. We're looking for price to break these lows here unless this breaks here. So that's how you kind of need to understand and find your highs and your lows. Find your last break of this here, the break of the low on the downtrend. Okay, that's why I've got this here, because this is my high here. This is the one that last push up before that broke this here. So after I've identified this, of course price could then come up to here potentially, but again, hop back in, where are we? Yeah, but potentially that's not what I did. I first hopped on 15, found my last push up, which was here. Again, price could have went up here, but this was our last area, this last push up before this little push down here. So this is a green box here, is my 15-minute supply and demand. So I'll now hop on the 5, find my 5-minute supply and demand, which was this box here, this last box here, this last price action candle. Okay, found that. So well, now once we're in that area, what can we see? We'll have a look and see what we can see here. So first thing I seen was price come in, price come down, breaks this area here, breaks it here, it's a sign of strength, comes back up, comes back down, holds this area now, comes back up, creates that spring, takes out this liquidity that people have sold in, takes that out, still in my box. So that's when you can enter this trade. Enter it here off that second candle. Your stop should be just above 35 risk to reward. That's fine. So my first target was around these areas here, just at this kind of clutter here. This clutter here was around the area that I was looking to take my first partial. So first partial was at pull that back up. First partial is around a 7.86. So even at that point you can put your stops to break even right here. Let's see what price does. So price comes up, retests this area, drops, retests this area again, drops, retests this. So there was potential to take another sell here, down to here, take another sell here, down to here, come back into your 1 minute supply and demand, drops again, boom, look at that, drops hard. And that's the simple thing, the simple way of finding that is finding your structure. Find your highs and lows first. Find that last push down, this last area, because we see here, prices coming down, creating lower highs, lower lows, breaking structure, coming back up, creating lower lows, coming back up. Now we're looking to target the lows again, which happened. And then again, see this happens for ages, keeps dropping, comes down to a higher time frame supply and demand area, and then back up it goes. So that's what I need you guys to understand, is you don't need to look and on the hour chart and stuff like that. Like that, let's have a look at that trade. So this trade here was that one box down. That was it. Was this one push down? That's where I found. Obviously you ended up taking it down to there, but that was one 1 hour candle. A lot of people get taught that they need to find these big moves. So let's say you entered off of this break of this candle. Where's your stops? Your stops are below, and your take profits. First take profits here for a 1-to-1. Your second take profits here. Whatever. That's a 2.29. That massive move. How much pips? Massive move that took 21 day and 1 hour. Look how much pips you can catch here, 491 pips just off of that move. That's only given you 2.29%. We found a 40 or whatever. It was a 7, say that first partial was a 7.86. We found that in one little candle. So that's what you need to understand, is you do not need to catch these big moves. You don't need to catch all of these. Even again, you've caught the break, even your stops are below here. Look how much you've caught. You've caught a 3.36 and all of that. That's took ages. Why? You really don't need to catch these big moves when you can catch small moves inside on the 1 minute with tighter stops, identifying Wyckoff, your weak to strong hand, your market structure in the smaller time frames. That's all you kind of need to identify. At that point, again here, what we're seeing these get broke here. Should break a structure. Okay, right, so again, coming down, push here. So all of this may look bullish, but if we look left, cleared these lows, come up. This could potentially come all the way back up to here, all the way back up. As long as it doesn't break these areas here, which we call our protected highs, our protected lows. These big pushes that start a trend. You can see it starts a trend, starts a downtrend. These big pushes are areas that we can look to take sales in, or take sales halfway, or a little pullback, because a lot of the time what you'll see is once people will look at price, and once this area here has been broke, they're thinking, okay, bullish, 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 they're buying, they're buying, they're buying. But when you look, you need to take a step back and not look at price structure. You need to look at the actual market structure, and that's what comes in key when trying to identify. Again, these are your lows. You see, breaks your lows. So price now, where's your last high from that area? Here. So looking at price on just this specific chart, not looking at the higher time frames, what do we see? We see price come down, price come up, price come down, price coming up. What is we are now looking from this time frame is for price to hold this area and come to create new lows. Now on the higher time frames, this is what I mean, you need to kind of look at the higher time frames on the 15, on the 30, and see if there is any other supply and demand zones inside the bigger market structure. This is only a 5-minute chart, whatever. On the 30, again, what I seen was this push down, this break, this pull up, this push down. So that is why I took the sell, and look at how small that sell was. We didn't have to take, you could have took a sell in here where your stop's just above that high, your take profit down here. That's still not a bigger risk to reward than that small move that I caught in there. And that's what I'm trying to drill into people in my Discord and stuff like that, is you don't need to catch these big moves. You don't need to, as long as you can identify where this next candle is going to go. As long as you can look at a 30-minute or a 1 hour and say, okay, this is where this candle closed, where is the most likely the second one going to go? Okay, potential down, or here, this strong move, where's the next candle possibly going to go? Okay, up, right, we'll hop in a 1 minute, we'll look for a pullback, 5 minute, we'll look for a pullback, and we'll take that trade from there. And that's really important to kind of get in and out the market quick. You don't need to hold your trades for hours on ends. You're in and out quick, you're making a nice risk to reward, and it's really as simple as that. Once you can identify that area, and once you can identify your market structure, your push down, your pullback, your break of that down, your pullback, then your market becomes very clear. Again, on the higher time frames, that is the other thing, because you need to be careful, is if on the higher time frames you see this is clear uptrend, creating highs, creating lows, boom. So from that 5-minute chart, as I just showed, it's looking down just from this, but when you take a step back on the 30, where's your protected lows? Okay, your protected lows are here. You can see price taps into your protected lows, because this is the last push down that broke this structure here. That's how I found my protected low. So you see, price comes up, makes a new high, comes down into your previous protected low. So this would have been your previous protected low, because it created a new high. Now because this has created a new high, this is now your protected low here. Down here, you see price comes into that protected low, off it goes. So where are we looking for price to come now? We are now looking for price to come and create new highs, and then potentially after it does, come back down into these areas to then create new highs. So until that your protected low breaks, overall you're bullish. But again, even though we are wrong on a higher time frame about where price is going, we know where market structure is, we know where our protected lows are, we know, right, okay, it's came down more than halfway. The chance of it coming down now to fill the whole move down is high. Again, this comes another strategy you can use as a box strategy. Again, you've got your box, your high, your push up, creating new highs. You've got your supply and demand areas here. So you've got your box like this. You've got your box, your big push up. You've got your supply and demand area. You've got your entry. Where's your target? Okay, target's here. Stops are just below your previous things. You're targeting the highs. It's a 5.56. But again, if you hop onto the lower time frames, you find a pullback, you find a nice supply and demand area on the smaller time frames. You can catch a lot higher RR, and that's a way kind of to make your charts a lot clearer, is finding your highs, finding your lows, and all this price action in between it. You can trade, like, as soon as you can identify that, there's your high, there's your low, prices came up, created a new high, what's the chance it's not going to keep going up to the moon? It's going to come back, it's going to make a pullback before creating new highs. So even with all this Russian news, whatever, it's still clear market structure that you don't even need to look at the news to understand what's going on. You can see until this is broke, we're looking to create new highs now. Came back into this supply and demand zone, off it goes. You can see, boom, away back up. So that's how clear it is. That's on gold, obviously. So that's how I found my sell, but because I was looking for the price to come down into these areas. Again, this is on GU. What do we see? We see this push up. This is our high. Find out. So yeah, our high, our low. So this was our protected low. Did not mean that. Like that. So just looking at price now, we don't need to look too far back. This was our protected low here, because as you can see, price came down, created a new high, came back down, broke your protected lows. Now it came back up, not broke your highs. You can see it's not broke your highs. It's your high there. Not broke your highs. Broke market structure. So I'll just clear this. You can see this is your break of structure here. So this was your last push up to create new highs. Broke that, came back up. So this is your sign. Came back up to your supply and demand area up here on 5 minute, 15 minute, whatever. Now created a new low. This was your previous low here. Created a new low. Now it's coming up into your supply and demand area. What do we see happen? Push down. So where are we looking price to go? We're looking for price to clear these lows now. So it's very straightforward. You see your first push down. See it pull back. See another clear of this. You see it pull back. Now we're looking, it's very, very simple. That's all you kind of need to understand. You see, we've broke our higher time frame uptrend. We see it pulling back up to our area, our supply and demand area. Our last high pulling back up to that area. Starting to create new lows. Again, price. This is what you need to understand as well. When it's coming to clear this low, this price action here. I'll show you this push here. Price could do this and then start to fall, whatever. Price can do that, and that's because your overall market, your overall area, your protected high is up here. This is your protected high right now. So there's still potential in this price action that comes, this next whatever price action that is going to come. Just delete all this for you. Yeah, all this price action that's going to come. There is potential for this to come up to here still, but eventually we're looking for price to come and clear these previous lows to then make newer lows in the bigger time frame. So again, you've got your smaller time frame lows and you've got your bigger time frame lows. You can see you've got your bigger time frame lows here, but you've got also inside of that you've got your lower time frame lows. So once you can start identifying the kind of key areas in the market, you can then look to trade off it. And again, listen, you do not need to catch these big moves. Once you find your supply and demand on the 15, the 5, whatever, take that trade, keep your stops tight, ride it out until you need to. You don't need to take a trade here unless you're really busy and you don't have time. like once you've identified your areas, you've set an alert. Okay, it's got to that area. Let's take a scalp on this. Came up to our supply and demand. Let's have a look, see what we can get. Okay, so supply and demand, stops are tight, not even 6 pips. What we'll do is we'll hop in, we'll see if we can catch a scalp here. Okay, there we go. You've got your MB, you've got your clear market structure here, creating new highs. This is your high. It's not made a high yet, so this is all, you don't need to do anything here. Here's your high. Like that now. You can see it's coming up, shown pressure. It doesn't want to break these highs. It taps in, comes back. Don't need to enter that yet. Don't have to enter there. Like that. Now you're seeing this break, this clear break of structure here, breaking structure here, breaking structure here, breaking all this structure, and it comes down to here. Okay, so makes a pullback that starts off this down again, and now comes down and breaks structure again. There's our second confirmation that this is going to come down again. What happens now? Comes into your last push up. Boom. Take your sell. Sells in here. Stops are just above. Where's your first target? Here. Back down to these lows. Where's your second target? Down to these lows possibly. Down to here. Where's your third target? Down to here. And you let the rest run. Let's see how far it's run. So that's price. Bloody hell. Yeah, so you can see how much more. There we go. So we've just turned a what would be, that's an 86 risk to reward from doing what? From dropping into your lower time frames. Never once came back up. Do you see? It never once came back up into your area, because you're just looking at, you've got your supply and demand areas, you're looking for the weak to strong hand, you're looking for your breakish structures, you're looking for your pullbacks into your smaller time frame S&D zones. Boom, take that sell right there. Never once, not once, for a whole day, never came back to your area, you see? Never came back, created, and you could have held this trade, took some partials somewhere, wherever you wanted to take partials, let 20% run, let 10% run. 10% from here, from say there to down here, is a heck of a lot of money, because, and it's not once came back. And again, once you've now identified where price is going to go, look how much more entries you've got. Boom, push down, supply and demand, take it down, comes back up, you let that run as well. Stops are whatever, here, just up here. Maybe get tapped out, maybe you don't. Let's have a look. So you found your supply and demand on the higher time frame. We've created lows. This is your 1 minute supply and demand area. You take that trade. Stops are just above this wick here. Let's pull this along. Does price hit it? No. So again, there's your second entry that you can then take down, let some run. Let's see what this price is. So this is a 34 to 1 risk to reward. So there's a second one, that's you already. 100 to 1, 100 to 2 RR. There's your third entry, a break of a trend. You've got that. You've got the fill of the imbalance, another one. You've got another entry here, the pullback. You've got another entry here, another entry here, another entry here. There's so many entries that you can find. Once you've identified where price is going to go in a higher time frame, you can truly scalp this all the way down for high RRs, for very high RRs. There's another one here. It's very straightforward once you can start. Look at that. Even that trade there would have been beautiful. All the way down there. You've just picked a little bit of it again. Comes back up again into another area. Another supply and demand. Your last push, your last high comes back up into that last high. But again, I've talked about structure. Talked about clearing these lows. Okay, so once we've cleared the lows, this is our highest point. Where can price potentially come to? Price can potentially come up to here. Where's your protected high? Your protected high's up here. Okay, once you've identified that, you take your sell stops or just above your area. Where's your take profit? Clearing these lows. That's what you're looking to do. Clear these lows. Cleared the lows perfectly. Even if you took profit at the lows, that's another 24 to 1. So in that one simple area that you've identified, then you can see how much potentials you can have. Again, now we come up, we break these highs, so now we're looking for price to come up. See price now creating highs, starting to come up, and now it's starting to fall again. So where are we looking to clear? We're looking to clear, these are our right now, as of now, these are our protected lows that we're looking to come now and clear because we're in the obvious downtrend. But again, look how simple, and I guarantee a lot of you guys watching this would have went, oh, I understand why I understand why you've made the areas. I understand why you would have took the sales in the areas. I understand it, and yous understand it, sorry. And I know yous understand it, but it's just identifying that on the higher time frames and not getting your brain clustered with all the price action, and just finding your highs and your lows. And once you've done that, you can find sales everywhere. Sales on this supply and demand, sales on this supply and demand, sales on this supply and demand, sales on this supply and demand. There's so many sales that you can take. Supplies on this one, supplies on this one, on this one, and then you can keep doing it until this breaks, until this area here breaks. Once it breaks, okay, we're not looking for the sales yet, we're waiting because this is potentially now starting an uptrend. As you can see, it does. And now again, what's it doing? Creating higher highs, creating higher lows. Again, you could have took a sell in here, come back up because you've got your zone marked out for your higher time frame. You can see it's creating higher highs, higher lows, lower lows, lower highs. Again, this is what I was actually talking about. We'll delete this. So this is a nice key example. So you see here, we're creating our highs and our lows here. Highs and our lows, highs and our lows. So once it comes to this point, once this area here gets pushed up and pushed down, price can still come up to here. Price can still come up to here before continuing down, because this is our protected high. Looks like them. This is our protected high here. So as long as this doesn't get broke, we're still looking for the sells. So again, you might not have took a sell in there, but you're still looking for price to come and break these lows now, which it has done. So that's a beautiful example of kind of what you can look for in price. And now this price could now start to potentially start to clear previous lows. You're just looking for your pullbacks, and that's it. And you can do it on every time frame. But I hope you guys understand how I caught that area, how I found that area, and how you could have caught all this price movement down. How you could have caught, even, you don't have to catch it all, but even if you catch some of your supply and demand areas, you understand why it's doing it and why the market is moving that way. And that's what I try and teach in the Discord as well. I like sending out signals, but once I see people starting to understand it for themselves. And again, look here, there's no indicators on my chart right now, nothing. This is clear price action, clear market structure this is right now. Clear market structure, your supply and demand, your weak to strong hand movement, your all that type of stuff. That's all you need. Your supply and demand, your weak to strong hand, your Wyckoff, and that's all you need to see. That's, again, there's so much entries in these areas that you could have caught, and I'm guarantee a lot of you watching this now would have went, oh, I could have caught these myself, because like I could have caught these easily. And that's how simple it is. So I'll leave it at that. I need to go and pick my brother up from school. Any questions, just drop me a DM. Or put it in the comments, but for now, that's it. Discord's in my description. See you all later.